There we go. Well, how come I couldn't get to this before? Alright, it's doing something. Let's see, we're going to cancel that. Oh yeah, it was loud. There we go. Well, how come I couldn't get to this before? Alright, and it's doing something. Let's see, we're going to cancel that. So we're going to go here, that. We'll mute these other ones. So now everything's working for some reason. We're just going to mute everything else. See if that takes away the... Yeah, that's better. That's better. These other ones. Now everything's working for some reason. See if that takes away the... Man, there's like a 10-15 second delay. So as I'm trying to figure this stuff out, it's literally... I literally have to wait 15 or 20 seconds in order when I change from one setting to the next. So now that I got it figured out, now we can move forward. However, all right, hang tight. Now, I don't know how to... Man, like 10, let's see if I can pause this. It's literally... I literally have to wait 15 or... Okay, folks, multitasking. So I have a rental property or two, and it's call it passive income. It's not passive income. Well, for me, it's not. I'm still, actively doing stuff with it and that kind of thing. But so just in re-renting the property out, just some of the things that you have to do. Got to take a few phone calls. You have to manage a few appointments. So let's get right into this coding. Let's see. And if you have any special requests that you want to see done, by all means. But what I've been working on recently is I'm only focusing on TQQQ. So I'm only focusing on one stock. I used to trade a little bit of everything, small caps, micro caps, whatever. As I come to realize, those stocks, they have a certain number of people who are in position for a long period of time. They may be bag holders. They may be anticipating a big move. Nevertheless, there's like, those are the participants in the market, and they're not even really active participants. And then all of a sudden you have some spike news, whatever, and then all of a sudden you have a whole lot of participants coming into the market, and then they make the stock move, ebbs and flows if it gets to the top, and then nobody else wants to participate. It can just drop completely. Those people who were not participating, who were like latent participants, they're not hopping back in. They're willing to ride the storm. They know if it pops up this time, it'll pop up again. Some of them exit, right? And so then you might see that the stock drops lower than it did even before the slight rally. But those are not stocks that you want to be in, and certainly you want to have some type of strategy to execute. And if you don't have a strategy to execute and to get out, to stop out, then you're going to find that that the bag that you're holding just is dragging the ground. That bag is so low. So I've held enough of those bags. I've learned that that's not really what I want to do. Now it can be quick money and that kind of thing. And that was fun, and it was fun while it lasted, but I'm looking for something that's more long-term, like the professional day trading deal, and long-term. All right, so give me one moment while I send this text message, and then we'll get to it. Tour request. Paste. Boom. Okay. All right, so looking at TQQQ, you can see it behind me here. Bam, bam, bam. The green screen, I got it going. It's nice. I like this, right? I like the green screen. Okay, and then everything pops up. I feel like I want to look behind me to see the chart, but it's not. And then, I feel like I can take myself away. How do I do that? Yeah, like this. Bam. Yeah, that's nice. And then I'm back. Yeah, I like that. Okay, all right, so we're gonna look at TQQQ. I'm gonna go ahead and bring it up on my screen here. And I don't know why it says order field. Oh, maybe that's from earlier. Okay. All right. So obviously, I'm trading the simulation account, and that's what I'm doing. I'm slowing it down. I'm taking a little bit slower. So that is perfect for me. All right. So what we're going to do today is, this is on the 15-second time frame, and I actually want to. So what I've been doing is I've been finding entries on the 15-second time frame. Let me see if I can. Oh, no, that's gonna be too loud. Nah, I don't want that. Okay. Because I do have alerts set up, so when these indicators go off, it'll create an alert, and so I want to be able to hear the alert so I can act on it. Another thing I've been looking at recently is on this the bottom down here. We see. Here we go. All right. Bam. Nope, didn't show up. Okay, there we go. All right, so the alerts at the bottom, you can see, nope, down here, you can see that I've created something called Bids and Ask. So Bids and Ask, show you this is what Bids and Ask is. All right, so Bids and Ask is this here. So it's pretty much just saying if the ask size is greater than or equal or not 0, and the bid size is not 0, then it's going to plot the average size, the ask size, over the last 4. And actually, I played with this a little bit, and it looks like it doesn't plot it over the last 4. It looks like it just plots it. So, but nevertheless, the plot 1 you see here is green, is blue. So plot 1, the blues are the asks coming in, and the yellows are the bids coming in. And I think I'm trying to make everything so that it's it streamlines from one indicator to the next, that it's all the same, so that I don't confuse myself, calling the ass blue on this one and then calling the ass yellow on another one. But actually, I think what I'm gonna do is I'm gonna change this. I'm gonna make the ass. I'm gonna make the ass yellow and the bids blue, and only because it's bids blue. So I think I'm gonna do that. Let me see if I can add this to this screen. Window capture, existing, capture 2. All right, so you can kind of see what I'm doing in real time here. All right. So what I do to change this is I'd go down and do set plot color, and it's plot 1. And then, so for the ass, it's going to be yellow. Boom. Boom, boom. All right, and then plot 2, set plot. I didn't spell that right. Color. Plot 2, it's going to be blue. Close that. Come back. Plot. Then we want to verify it. No errors. Unfortunately, it because for ask and bid, for a lot of this other stuff, you get historical data. So for the open, low, close, high, those numbers. I mean, those numbers are the same. These numbers are the same too, but for these numbers, they're in the historical data. So you can just summon it. You can just pull it up. Oh, can't see what I'm pointing to. These numbers here. You can just kind of summon it. You can just pull it up. But on the bids and the ask, they only let you use this information real-time data. So anything back here you can't access. All right. All this information back here you can't access. As long as you have the chart open, if you have the screen open, if you have the trade station open, you can access it. It'll show up, it'll give you some information, but once you close the screen and then you open it back up, you lose it. So you see, I just re-verified the study, the indicator, and then it went away. So it may still be on one of my other charts, but I imagine all those got re-verified. Yeah, so I lost it on all of them. No, I didn't lose it on this one for some reason. Okay, but what we're here to do today is to find out how to code to find these particular entry points. All right, and so this code here, I don't want to give away all my code, because that would literally be like giving away free money, which none of this is investing or advising advice, but nevertheless, I have found that some of these codes work better than others. And you can see here, like this is one of the codes with the yellow dots. It's one of the codes that I created that's supposed to give an indication to that it's a pullback, right? And that's what it's doing. It's hitting at the top of these. It's a pullback. So a lot of the work is taken out of it for me. But so some of the code, it may say, for instance, and like I said, we'll do one here in just a bit. But it'll say if the bar is longer than the average, it's a potential. If the open, this bottom, if the open of the bar opens above the moving average, it's a potential. If the volume is above the average, it's a potential. So you put all these things together, and so when you put it all together, it should give you 1 or 2 or 3 areas where it's like, all right, well, these are the most probable areas for a pullback or for entry. And man, I love it. I've been working on this trading this coding stuff for the last week or two, and I've been coding for a while with now Easy Language and TradeStation, but also with Thinkorswim. Thinkorswim has uh gosh, I just forgot it. Because I haven't been using Thinkorswim, TD Ameritrade, Thinkorswim. I haven't been using their coding language in a while, but it's similar, but it's not the same. But either way, all right. So let's clear out this chart, and we're just gonna kind of go by it step by step, and then hopefully we come up with something. And honestly, this stuff can be tough, so we may not come up with the perfect indicator today or right now, but that's just the way coding is. And like, I may sit here and go through it for 20 or 30 minutes or 5 or 10 minutes and come up with something kind of nice. But then I may spend another hour and a half playing with it and then come up with something even better later. It used to take me about 2 hours to come up with some of these decent codes, and now I can do a lot of them in about 10 minutes. The last night, it was a tough day. Let's see if I can pull it up. Yesterday was a tough day, and I think I was on the 15-second time frame, but it took me about 15-20 minutes to get the most of it, and then it took me another hour to figure out the last little piece, which was pretty tough. All right, so we're gonna go to settings. I want to stretch this time out. Time frame. Customize. All right, so this has got to go back on the second time frame. I wanted to go back not 1 day, but let's go back 1 week. All right. It's been a little bit slow for me today. Okay, so if I can go back to yesterday. No. The one I did yesterday, instead of doing a 1 minute or a 15-second time entry, I did a 15-minute time entry because everything looking like on the 1 minute was kind of slow. And again, like I said, I'm only really focused on TQQQ, so you can see that there's a lot of markings. I make a lot of notes, so it's just all on the chart, and that is that's how I'm learning. Okay, so on the 15-minute time frame, let's go back and add the study that I made last night, which was a show me, and it was on 7/17, 15-minute correction bull. Okay. Let's make this smaller so you guys can see more of what's going on. Okay, I'm a little guy now. I'm a little guy. What is this? What was this? I don't know what that is. We're going to get that out of here. Oh, that was the other window. That's the coding screen. All right. So on the 15-minute, there we go. Open that up. So there is yesterday. Did I do the 5-minute? I thought it was 15-minute. Okay. Well, I'm not seeing it show up right now. Let's see. Edit studies. 15-minute correction. 7:17. 23:15. Well, let's do this because maybe it's just not looking really big. 7:17. Customize it. Style. Make it a little bit larger. I think that's large enough. So show me. Let's get this out of here. Maybe complicating it. And it's not showing up. Let's see if there's something going on with the code. Usually I don't have any issues. It just opens right up. Show me. $7:17 a.m. 200 bounce. Maybe it's the 5-minute. Maybe I did it on the 5-minute. 5-minute, but it was the other one. The 5-minute AM 200 moving average bounce. Yeah, that's what it was. All right, so that's the one that I came up with yesterday. You see that with each of these little pullbacks, we have the potential entry right here, and it's in red. So I'm going to change that to blue. Double click it. Captain Sounds. All right, edit studies. I'm going to go to this one. We're going to customize it, and I'm going to change the color. We're going to make the color, going to make it green. Going to make the color green. Close that. Boom. All right, so actually, I'm going to take everything off of here. I'm going to take everything off. We're going to start from scratch because that's what I like to do. I got a couple things on here I can show you. All right, so, but first, no, not primary trade. Let's go to basic chart profile. Okay, so this is where it gets interesting. This is where it gets fun. Okay, now down to the nitty gritty. We're gonna make a code. We're gonna make an algorithm. All right, and we're doing it for today. So we're gonna do. This is on a 5-minute chart. It looks like it's moving up. I like that. I like that. Right, that nice little rejection on the way up from the non-EMA. And I realized that this non-EMA here, however they have it coded, and I keep saying EMA because I'm used to exponential moving average, but it's the non-moving average, and maybe it's a simple moving average, but I think it's calculated fast. They call it something, but either way, this non-moving average is a little bit different from my from a simple moving average when you plot it down below. So what I'm going to do is I'm going to leave this side of the screen open. I'll leave my head down here, and then I want to put this screen up here so you can see the code. And let's see what you think. Okay. All right, now I'm gonna put this up here so it works for me as well. Okay. And now let's get to it. So we're going to start with something like, so we're just going to open up a new one. This is going to be a show me. So yeah, let's do this. Exclamation mark. Oh, exclamation mark. There's 0718 23 T Q Q Q Q. I'm just going to put over 200 moving average. Okay, so I'm trying to give myself some type of indication of what happened for the day. So if I run this script, then, you know, because I have a bunch of scripts. So if you look here, you can see that I have a bunch of scripts for show me's, and see all these for show me's, right? So all these, like I said, I've really been coding a lot of these consistently daily for the last week or two. And so from 12, 13, 14, 15, 17, 18, I'm doing them daily. I mean, I'm pretty consistent about it. And so as we start accumulating these scripts, all of them won't work on the same day, and I'm a strong, firm believer that all of them work for one reason or another, whether it be something going on in the market or just it hits a significant price area or something like that. So each one of the files that I create, I want to have some type of indicator, some type of indication. And then I'm also like logging these in my on my spreadsheet so I can see, okay, well, this specific one, this 7/18/2023 5-minute entry worked on this day, and this was like the setup. And so when a similar day comes around, I'm like, yeah, I'm going to try that one. Okay. All right. So for this one, we're going to start with, so the only thing that we have on here is the volume right now. So we're going to get rid of everything. And then I like to always start with just putting just something down here, low. And then we're just going to do plot one. We're going to put value. Okay. And then we verify it. Value one. This did this to me the other day. I'm not really sure why. Because it should be able to plot value one. I mean, I think it should. Okay, now it's working. Or maybe I spelled it wrong. I probably just spelled it wrong. Too fast for my own good. All right, so I verified that. So we're going to go over here. And so the value there, the value for value one was low. So it's plotting the low of the candle. All right, so let's come here. We're going to go to add studies. Going to go to show me. And what do I do? 718 TQQQ over 200 EMA. But I also need to change that because I need for it to, we're going to make it blue because we're going to look for long entries on these bounces. All right, so you see what came up? Everything came up. All right. That's cool. That's cool. All right, so now we need to narrow this down. We need to, we only want certain candles to come up. So we're going to indicate the areas that we want, like that area. We want this area. We like that. And then these start getting a little bit funky because there's not really a lot of meat on the bone for these moves here. But I mean, they are bounces. Nevertheless, let's make these a little bit more visible. So, and look at that. That was a good entry, right? It's moving. It is moving off of that, which is all right. Okay, so the most obvious one that we could do is just starting over the 200 EMA, right? Instead of trying to capture this one, I think that makes sense. Just try to capture these. Again, if I was to open the chart and use this use this study, I'd probably want to use it in relation to the 200 moving average. And so I probably would wait until it got over the 200 moving average before I started to employ it. So just for that, we're going to make it over the 200 EMA. So we're going to start with this one. So we're going to get rid of this one. So a lot of this stuff is logic. You know, when you're doing coding, coding is like all logic, right? So, I mean, you need to put logic on the front end and the back end. Okay. Computadora. Muy caliente. Don't like this, don't like all this work I'm putting on it. Okay. Well, sorry about that. All right, so the first one that we're going to put is going to come down here. All right, so condition 1 equals the open is greater than the average of 200, now of the close of 200. And so that's saying that this candle is opening over the 200 moving average. So if condition 1 is met, then we're going to plot value 1. We're going to plot that low. You could do, well, let's do begin and end, because then we can set up for begin. It's going to plot 1. And also it can do that. It can set the alert. So end. Bam. Verify. Semicolon. What? That's not a period. That is a semicolon. That wasn't a period. Verify. Bam. All right, so now we have all these, but we lost that one. And I don't like that. I don't like that at all. All right, so we got to go back here. If the open, so the open is over the 200 moving average. Like I said, I think this goes to where I was telling you that these averages are a little bit different from the actual like simple averages. And I've got to figure out how to code for this average here. But I know I saw it in there. It was something like exclamation mark average. Does that do it? Yeah, see. So you can't just make up your own logic. Can't do that. All right. So open over average, and it did open over the average. And all these fired off, which they should, because they're all well above this EMA, this moving average. So I think, and I mean, I could just kind of show you the basic stuff right now, but that's not what I want to do. That's not what I'm going to do. I'm doing this for me, and y'all are just along for the ride. So y'all can get on the ride or get off, but either way, I'm doing it. All right, so what I'm doing here is I'm going to go ahead and I'm going to create an indicator that shows me what those simple averages look like instead of whatever averages they have. All right, so simple averages, because I always do my trades with those 3 averages in mind. Okay, so plot 1 is the average of the close of 9, and I always set my plot 1 plot color of 1 to black, and then plot 2 is the average of the close of the 15. Hang tight. Okay, once again, who said it was passive money? All right. Let's see. Where were we? Plot 2. Plot 2 is a 15 moving average, so we're going to call plot 2 set plot color plot 2, and it's going to be the yellow, and then we're going to do the third one in green. 3 average, and that's the close of the 25, and that's set plot color. That's 3, and that's green. All right, so now we're going to get a chance to see what these things actually look like. And yeah. Oh, got an extra closing parentheses, and that's going to be on all these. Again, guys, logic. Yeah. Actually, I really like doing this coding stuff, though. Kind of weird like that. All right, so simple averages. So we're going to take this one off. Remove that. And then we're going to add the one, that code that we just made. It's an indicator. It's not a show me, it's an indicator. And simple averages right there. Oh, don't need to edit that one. Okay, well, there's a red. Where are the other ones at? All right, let's go back and check that code. Average of the close of 9. Yes. Average of the close of 15. Yes. Spelled everything right. Average of the close of 25. Yeah. Oh. Well, this 25. Okay, it's on the 1. It's 1 by itself. So we're going to remove that. And then these, they went down to the bottom. So we're going to edit that. And that doesn't need to be crosses. That needs to be a line. It's black, though. That's good. All right. And then we're just going to drag these up there. All right. That looks very tight, though. I don't know about that. Okay, yeah, there we go. Okay, yeah, those lines definitely don't look as aggressive as the lines we were looking at earlier. And, oh, we need to go back and add the 200 exponential moving average. So, plot 4 average, close 200, bam, and set plot color. This is the 4th one, and it's red. Look at number red. Number red. That's a number red. All right. Oh, it's a thin one. How'd you do that? Nice and thick. Nice and thick. That's how we like it. All right. All right, so now if you look at it, you remember before we were looking, we saw that 200 moving average came down here. Now, it was kind of like here, and then it came through here. Something like that. But it was... Wasn't it? Yeah. Matter of fact, let's pull it up. Because it was just the moving average. Because this stuff is very important. Okay, there's moving average exponential. Maybe it was moving average exponential. Okay. That's some moving average exponential right here. Look at that. Look at that light one, that small one. Is that the 9? Input. That's the 9. So the 9 is like really different. So our black is the 9, and their thin red is the 9. See that difference? Yeah, and again, where you plot your stuff at, that can change your whole bars. Like sometimes I'll make it so that the bar should not touch the non-exponential moving average or the non-moving average, and here it does touch it. But so now that they do see that TradeStation does have an exponential moving average as opposed to a simple moving average, let's see what the exponential moving average code is. But I think I looked at it before, and it's not like a true exponential moving average like Thinkorswim says that it is. All right, so this is their exponential moving average. And there's that exclamation mark I was telling you about. All right. So double average exponential price length. Absolute value of displace. Yeah, so what I would do is I would just actually I wonder, is that a, no, I don't think so, a formula. Exponential average, EXP, exponential move, exponential. Because they have different codes and stuff of ways to pull up functions and formulas. I don't see anything that looks like an exponential moving average. Yeah. So I think I could create a function, a formula, a function, and it'd just be this. So I would just take like this, and I would copy it, and I would go over here, and I would go to function, and I would say, we're going to call this 200 EMA, and then that, and then, well, but in order for me to do that, I technically have to go ahead and define what it is. Define that this is 200. If displace is greater than 0 or current bar. Because where's the input? Double length, double price. Okay, there's the input. Close input. We're going to make this 200. All right, and then we'll just save that. All right, so then we can come back here to this, and you see where we have our. So we're gonna leave two of them. We're gonna make two of them. So the one is a simple. This one right here is a simple average, moving average. And then now we've got the function that we can do, which was 200 EMA. And we're going to plot 200 EMA. And we'll make that, I don't know, brown. Do they have a brown? Well, we need to do this. Brown. Brown? Black, brown, blue, blue. Okay. And now verify it. Did not like that at all. Ooh. Did not like that at all. 200. Yep, I did it. I put 200 right there. Close. Not recognized by easy language. It's not a property. I just put the number there. Okay, well, looks like I can't do that. Can't do that. All right, so I learned something new, but I will come back and do something with those exponential moving averages. All right, so that's no go. That's a bust. All right, we're going to come back here. We're going to get rid of that and re-verify it. Okay, so all those are back, but I'm pretty sure that this was, this was higher or lower. So that's our 200 exponential moving average. This is their non-moving average. We're going to change that to, and see right here, I'm changing that to 200. That's what they had on the function, and they had it as 9, but we have it differently. All right, so this is their 200 exponential moving average. This is our our 200 simple moving average. So it changed everything. All right, nevertheless, we're going to get back to what we were doing, and I do digress from time to time. That allows me to learn new things along the way because, you know, I don't let things go unlearned. Yeah, if you like that. All right, so this one here, we would have to say that the open is over the 25 exponential moving average. All right, so let's go back. All right, and 718. So the condition, so if we do it, if we say that these have to be over, they have to open over the 200 moving average, then that would be wrong because all these open over the 200 moving average. This one again opens over the 200 exponential moving average, but as far as opening over the moving average, we need to go for this 9, 15, 25, right? 9, 15, 25. Verified. Got rid of my parentheses. Okay, so now all these show up. All right, good. So now we need to get rid of, these. All right, so here the volume is over the 6 volume average. Here the volume is over this. Let's see, this one's pretty close, so we got to click down so we can see what that volume is. That volume is 654, and the moving average volume is 633. So it is over. So that's over. This is, man, very close again. Volume is 479, and this 6 is 483. So that's not over. This volume is not over. This volume is over. What happened to? I don't know. This just doesn't look like enough of significant swing. So let's move down to the 1 minute. Wow. Okay. So we don't want to get in on any of these that are opening over the 9 exponential moving or the 9 moving average. Okay, so condition 2 equals open under the 9 average, close 9. That. Okay, so then after we put that there, we have to also go down and say if condition 1 and condition 2. I like to put this down here. Verify it. Spell it right, Eric. Verified. Gotta spell it right, Eric. Shame. All right. I think we might be able to capture this one down here too. I'll say, first of all, let's get rid of this one. Well, let me go back up here. All right, so open. All right, so this, I'm going to say the low. The low has got to be under the 9 moving average. So then that gives us this one back. How come we didn't get this one? I said the open has got to be over the 25. All right, so we're going to get rid of condition 1. And then we got to do, well, let's see what else can we do with condition 1 instead of taking it out, because we just end up putting it right back. All right, so that volume is over, that volume is under, this volume is under, this volume is under, this volume is over, this volume is under, and this volume is over. We're gonna go under. Actually, yeah, we could capture this too. So we're gonna say that the volume has to be under the, well, we could do the 6 average or the 50 average. The blue line is the 50, the yellow line is the 6. So we're gonna do, the volume has got to be under the 6 average. 6 period average. Nah. Put this up here. Volume is less than the average volume. 6 periods. Condition 1. Re-verify. Bam. Okay, how come we didn't get this one? All right, so, because I want that one. The low is under the average of the 9, which that is. And the volume, oh, this volume is just over. So, and this volume is quite a bit over. And this volume is close. It's not over it. It's not way under it. And this volume here is quite a bit under it. So we wouldn't be able to capture all this with just volume. And actually, I think we're going to lose a lot of this without, if we include the volume. But yeah, so, ooh, this is a funky day. This is a funky day like yesterday. It's hard to have find algorithms that really capture everything. All right. So, but a couple things I do see. I'm going to take volume back out of it. I might bring it in later, but it'll be really, adjusted. It'll be like a fraction of the average. But I do want it to be, so I do want the close to be under the open. So I do want it to be a bear. Okay. Under the 915.25, under the 25. All these are under the 25. So I do want them to have a low under the 25. Yeah, that works. And condition 3. And then condition 3 equals low under 25. Low, under, average, close, 25. Bam, bam. Oh, I miss Shuba. All right, so this is all TQQ. This is all TQQ. I'm focusing just on TQQ. All right. So again, let's. All right, so now we got a couple decent entries, right? So on this day, this stock is, so we got three conditions. One, you want to hit that bear. Two, you want the close, you want the low to be under the 9 simple moving average and the low to be under the 25 moving average. And just because the low is under the 9 moving average does not mean the low is going to be under the 25 moving average, right? Because they twist, they move. See here, the 9 is under the 25 moving average. So you need both of these. All right, so we got those two. And then what are we doing on volume? So we have that one there. I always like to do something with volume, but volume here is over. Volume here is over the 6 moving average. And we have plenty here that the volume is over the 6. We have these here where the volume is over the 6. We have this one here where the volume is over the 6. Yeah, cool. Yeah, I mean, I always like to do something with the volume. All right, so we're going to do volume. 4 equals volume over average volume 6. And this is just saying that we're taking an average, and it should be a moving average over 6 periods of volume. Average 6 periods volume, or average of the volume over 6 periods. Verify. Didn't like it. I can't spell. It's not the first time. Actually, guys, what? Actually, it's not that I can't spell. It's that I'm typing so quick, and my computer is like 10, 12 years old. It's probably not going to make it much longer, knock on wood. But my computer is not really keeping up, and so as I'm doing the keystrokes, it's missing keys, it's putting keys after other keys. I mean, it's wild. All right, so we have this here, right? So boom, boom, I like those. Boom, I like those. Boom, good. All right, these here, what's going on here? This is a lot of entries, and they actually, if you entered here, you would actually get stopped out. You know, so I don't like these. But again, like I said, this one here, this indicator here, it should be utilized when the stock is getting over that 200 moving average. Okay, and I can see I'm gonna have to go back through all of my my studies, and especially rename them, because whether or not I'm doing the exponential moving average or the simple moving average is going to be kind of significant. I mean, it is significant. But what I've been coding for here most recently is just a simple moving average. So I have to make a note that everything from like 718, 719 back is going to be simple moving average. Okay, so all these did respond pretty well. All right, that one's crossing, that one's crossing. So right now I'm looking at the 25 simple moving average. I'm looking to see, as these are all kind of crossing the moving average, are these good? This one crosses, it's good. These are crossing the, I mean, when I say crossing, the bar is actually through the indicator, the line. The moving average is actually, the moving average is actually through the bar. Here it's like kind of right on top of it. Here's on top of it. So I could, and if I got rid of bars that this 25 is through, because this is cutting right through all these bars, I'd lose a lot of these blue ones. So I'm going to see if I can come up with something regarding that. So condition 5 equals, yeah, I'm about done, because my computer is, she won. So I'm sorry if you didn't get to ask questions or have me look at another stock, but I mean, we pretty much got about what I wanted to capture here anyway. But let's see, the 25 moving average cannot be between, I don't even know if I have a word of between, cannot be between the high and the low. Let's see if we have something like that. Average of close of 25, not, do we have between? No, we don't have between. Between, mid, no. Let's see, we do have midpoint, but it's taking the same number across several bars. And finding the midpoint. So, I mean, let's just keep it simple. Okay, so it's great. So well, if we do that, we're gonna lose this one. But I can say that the midpoint of the bar has to be below the midpoint of the bar has to be below the 25 exponential moving average. So let's do value is equal to high plus low divided by 2. That's going to be value 2. And then we're going to say that the 25 moving average is below value 2. Okay, so we didn't really lose any of those either. We'll say value 2 minus, I don't know what the true range is here, but I'm just going to kind of like guess that this will work. Well, that's because you were supposed to type on out. Okay, yeah, but it didn't change anything. Value 2, which would be the midpoint because it's a high plus low over 2. Average of the close. What did I do with that volume? I didn't put that volume in there. Because like I have the conditions on here, but I didn't go down and add the conditions down here. So, yeah. All right, let's see what happens if I add that condition. See if I lost anything. Lost everything. It's because I can't spell. All right. Ooh. But just doing that volume, that's what I want. That's it. That's it. Done. In only an hour. Nah, I could have done that a lot quicker. I was just messing with you guys. Nah, we're having fun. Getting the setup, kind of showing you what I do, all that kind of stuff. But I am curious if I was to add it, if I was to add the condition 5, what would that do? How would that take it away? Nah, it wouldn't. Well, let's see. Let's take away the subtraction there. Okay, so then we have those. So let's do it's greater than value 2, greater than value 2, greater than value 2 plus average true range 7 times. So we're going to say value 2, so the midpoint plus 1/10 of the average true range. That's what we're saying. 25 has to be lower than that. Yeah, there we go. Okay, so we got that, but we're going to do it of the bar before. Let's see, of bar 1 ago. Oh, you mean you can't do that? You can't do that? Oh, let's see. Can you do it now? Okay. Yeah. All right, so we lost this one. Oh yeah, because all this is well below the 25 moving average. However, I'm okay with losing this one if we have all of those other ones. Let's see if we get rid of that. I don't know. I'd rather have these and this and this and these. I'd rather have the, because I think on the other one we didn't get these. We didn't even get these. So I'm just gonna go with this. And again, so I might spend another hour just trying to find something to get rid of this one, and or maybe this one. And I probably will. But again, that's the, and maybe this one. Again, maybe that's the very fine part of coding that you're not gonna get for free, guys. You know? So I hope you got something out of this. And you know, I'll come back and I'll do it again. This is what I do every day. Yep. What I do every day. Yeah, I think I like this. All right, so I'm just gonna leave this like this. And of course, this I don't consider any of my codes to work toward the end of the day. And really, I want to focus my codes on working in the first part of the day. But what's going on here? So it got that. So you might have entered in on that low there, and then you had a nice little move up, or entered on this low and had a little move up. Entered on this low, little move up, but this one would not be a good one. But this one also should have been kind of scrapped because of that that midpoint condition. This 25 has to be, oh, the 25? I was thinking the 15. I bet if I do it now, it's going to really screw everything up. But let's see. All right, so if I change that to 15, because the 15 is the yellow line, not the green line. Green line is the 25. Okay, yeah, so brought back a few more things into play, but like I said, I'm okay with that. And again, as you start getting toward the top of your cycle, you should be moving into, so that we're on the 1 minute. All right, we're on the 1 minute, and all this is working nicely on the 1 minute. But as you start getting to the top of the cycle, as this is looking to make a reversal, you should be on another time frame identifying that you're at the top, right? So in another time frame, you should have another study that says, oh, this is getting spent. This is about done. And I don't have a study for that. But so that study that I just made worked for the 1 minute. And again, you should have multiple charts open to kind of show, all right, so on the 1 minute or on the 5 minute, it's go time. Now we hop over to the 1 minute and find entries. But still on the 5 minute, you have the you have an indicator kind of set up ready to let you know that it's getting spent. All right, so 15 second, this yellow one here lets you know that it's getting spent. But I thought this was for a different time. Yeah, see, this is actually coded for, I think this is coded for the 15 minute. And I have seen that where the indicators work across different time frames, and that's cool, but I wouldn't expect it. But that's where, on my spreadsheet, I'm making notes and saying, hey, this one works here, it doesn't work here. And actually, as we made this one, I want to go back and I need to rename that because I have it as TQQ over 200 EMA, but I need to put in here that it's the 1 minute time frame, because the time frame is very important. Indicator. All right, so 718. No, this is show me 718 TQQ over 1 minute. We're going to rename this TQQ 1 minute over 200 EMA. Anyway. Okay. Well, it opened it and it saved the rename at the same time. Okay, so again, if we put it back on the 1 minute with that indicator still on, you see boom, 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 boom. Yeah, I like it. All right, so and then on the previous day, sometimes I see it. Like I said, sometimes I won't. There's different setups for different reasons. On this previous day, if we were to use the same code, it identified again, this is the kind of one that I'd want to code out. And like I say, it's got something to do with crossing these averages. And so I'll get it to code out. But here, you got in at the bottom, move up here, bottom, move up here. Hopefully you didn't get stopped out, but a move up here, nice move up here, move up. All right, so all those look good. And then over here, you did. I mean, you caught these on the pullback. This one I don't like. You would have got stopped out there. But again, it's crossing these moving averages at this point. So hopefully I can get that coded out. Here you got in, nice move up. Here, nice move up. But when come on. When you get in that tight, when you get in right at the bottom, your stop loss can be so low that this move might look small, but if your stop loss is that tight and you just getting in, then this might be like a 1 to 10 risk to reward. If you look at the grand scheme of the chart, depending on what your strategy is, you might put the stop loss down here. So you're like, okay, well, I'm getting, 3/4 of my risk for my reward. Or if you're like, nah, I'm just going to get in whenever it tells me to get in. And you get in here and you're like, I'm just going to look for half of this candle back. Boom. If you get in here and I'm just going to look for this half of this candle back. Well, you might have a stop down here at half the candle below. You got stopped out, but it signaled you down here. Get in here, half the candle, you made it. I mean, really it's 2 times. So with this indicator, you might then say, all right, well, it's a 2 to 1, right? So put your, the width, the half the range of the bar, you have that as your stop loss. You want to at least get that half back, and that's your 1 to 1, or at least get 2 back. That's 2 to 1. And you see from down here, some of these, that's a 2 to 1. That would have been a 2 to 1. This right here, I mean, that's kind of gangbusters, but I'd say, all right, well, that's the stop here. All right, so that would have been, if you get in at the half, down here, I mean, that would have been like a 4 to 1 or something. Halfway up. Yeah. So, I mean, you just got to figure out what works for you. But I'm figuring out what works for me. And this is looking pretty good for me. Nice. Stopped out. Nice. And you're going to get stopped out some. But I'm also, like I said, with me looking at the other charts and looking at these bids and asks that you see over here, I am trying to incorporate other measures into the trading. So not just using these algorithms that I create, but also using the bid and ask, also using the time and sales data. You saw that back there. Time and sales data. I'm looking for huge orders, right? So what happened at 122? I don't know. But I'm looking for huge orders and using those as confirmations along with my code. So what happened at 122? Did it drop or did it shoot up? 122, 122 in this range. So at the 122 range, it was a huge buy. And so what I do is I put a circle here. And you see my indicator, it already indicated it was a buy. You see that blue bar? I mean, my indicator indicated it was a buy. And now also we had a huge order. So that's confirmation that, something significant is going on. And so what I do is I go through here is I look at the order sizes, and then I come back for each day, and then I put circles and I notate. I'm looking for confluence, right? So I'm looking for the indicator to fire up, as well as order, or as well as absorption. I'm looking for that confluence. So yeah, this was thanks for joining me and making this indicator. I won't share all of them with you, but I mean, you literally have that code of the one that we just created today, so you can do whatever you want to do with it. Amen. All right, this is Eric. I'm out.